To refinance or to not refinance? That is the question. Hi, I'm Chris Henwood, and welcome back to the Henwood Edge. We've been away for a while, but now we're going to be back. We're going to start running some more shows that'll be coming out weekly or so. So today we want to talk about refinancing. There's been a lot of talk in the news recently about refinancing kind of being over as far as interest rates starting to climb. Well, I've got news for you. The opportunity to refinance is not over. Rates are still near historic lows. I'm going to show you that in a minute. Okay, some key facts here. We are definitely in a rising rate environment. I think the inflation is starting to come into play here, rearing its ugly head, and we are seeing interest rates across the board start to increase especially in terms of mortgage. But again, not dramatically. Okay, so there's still a lot of opportunity here. Home values have also increased dramatically recently across the country. The value of people's homes, the equity that they've gained in their homes is pretty substantial in a lot of cases and worth exploring. And housing inventory nationwide is at, I think, probably nearly all-time lows, at least since they've been keeping records. So that is what goes hand in hand with your home value going up, the fact that there are so few houses. So let's first talk about interest rates, okay? Now, as we said, interest rates have been rising. Now, I grabbed this chart off of Freddie Mac's website. I really like this chart a lot. This is 30-year fixed rate mortgages, and this is the national average that Freddie Mac is reporting. So let's just take a quick look at where we were and where we are and where we're going to wind up. So 2016, around 3.5%, climbs up 2018, near 5%. I remember those days. People were happy to get under 5% mortgages when that's where the rates were at any given time. Now, from 2018, 2019, rates are falling. 2020, obviously we know 2020 was 2020, and we wind up at all-time lows, some number below 3%. Okay, it's not specific on the chart, but definitely below 3%. Now, what's happened since then? 2021, rates have started to rise back up. No market moves in a straight line. No financial instrument just behaves in one way. So we're seeing rates start to increase, but look, we're still 3%, plus or minus 3%. We're right there. So it's still a great opportunity to refinance. Whether you refinance here or here, is that really going to matter when we're there in 2020? Now, I think this chart's a little bit conservative. I actually think rates might be a little bit higher come 2022, but either way, your opportunity still exists to refinance, okay? Now let's talk about the equity in your home, why that's happening. Okay, this chart here, I actually grabbed this from a New York Times article that came out just last week. The chart I thought was so profound. This comes from Altos Research. I want to make sure I give credit where credit is due, and it includes condos, townhouses, and single-family homes across the United States. The normal inventory is somewhere between 1 million and 1.5 million. You see how it fluctuates seasonally all the way across the board? Now look where we are in 2021. We're under 500,000 houses available for sale across the United States, 468,000. Okay, basic economics 101. You have low product, high price. Scarcity increases price. It's a basic economic principle. Therefore, people's equities in their home have grown significantly in almost every single market across the United States. So what do we do with that information? Well, these are some of the reasons that you may want to refinance. You can reduce your monthly payments. That's kind of the most common one, right? So you're paying X amount at a higher interest rate. We can lower that interest rate, in most cases substantially, and you pay a lower monthly payment. You might want to shorten the term to pay off your loan. You can go from a 30-year to a 20 to a 15 to a 10. And even though the monthly payment might be slightly higher, you could be shortening the amount of time and the overall interest you're paying on your home loan. So that's something to consider. That might be an opportunity or something you hadn't thought of before. In addition, you can consolidate your debts. You can pay off those high interest credit cards, HELOCs, or other debt that you might be holding, personal loans, student loans, etc. When you look at the interest rate for credit cards especially, you're talking 15, 20, 25% annually on your balances. And if you're carrying balances, that can accumulate into some significant numbers, not only monthly in terms of what you have to pay, but also over the course of a year, the amount of interest you're paying just to keep that debt alive. You can wipe that out using some of the equity in your home. We'll talk about that when we get to the cash out, and which is getting cash out of your existing equity. That's how you could accomplish all of those goals to help you put you in a better position. Now, your cash out options. Pay off debts, like we just said. That's one way to use it. You can do a home renovation project. You can take the money, the equity in your home, cash out a good portion of that, use that to renovate your home, actually increase the value of your home even more than it has by virtue of that, and make your home the home that you really want to live in. Especially people have been indoors and kind of been in their homes this past year for the pandemic. That's been a huge priority, and we're seeing contractors and builders across the country are booked solid. Lumber prices, other building material prices have shot through the roof due to the demand because there's a lot of people doing home renovation projects. So you can be one of them. I have many clients who are currently in the process of doing either cash out, using that money for home renovation, or we have loan products, conventional and FHA, to do a renovation refinance that gets you to renovate your home, build it all into the mortgage, one monthly payment, and usually at a lower interest rate, given that where rates still are today. So that's something to explore. Also, other is whatever you want. It's your money. Right now, it's just equity in your home, but you take that cash out, you can help pay for your kids' college, you can go on a trip, you can buy, some people use it to buy real estate, some people use it to buy investment properties or second homes in warmer weather or colder weather, ski house, beach house. So really, it's your money, you can do whatever you want with it, but the other is a big plus to the cash out refinance, okay? Numbers tell the tale, okay? It all boils down to the numbers. It has to make sense. It has to work for you. It doesn't have to work for me or my company or anyone else. It has to work for you. If it works for your life, then it's worth exploring and maybe doing, okay? And one of the first questions I always ask people in this situation is, how long are you planning on staying in the house? Because that's kind of important. If you're gonna be there 2, 3, 4 years, refinancing your home is probably not the right answer. But if you're gonna be there 4, 5, 6, 10, 20 years, then the cost for refinancing, there's always a cost for refinancing. Most times you can just roll that into your loan so you don't really feel it, but the cost to refinance has to make sense so that you're getting the payoff over a longer period of time and it's benefiting you. This is all about benefiting you, putting you in a better financial situation. So that's why we have to always look at the numbers and make sure that what you're doing benefits you. Okay, my rule of thumb, going kind of hand in hand with that benefit theme, my rule is that if I can't save you 0.5% as a general rule, then it's probably not worth doing the interest rate. You may already have a very good interest rate, you don't need cash out, you don't have that much equity, so therefore it might not make sense, okay? So for you, that might not be the right answer, but if I can save you 0.5% or accomplish some of these other goals through a refinance, that could be a huge help to you financially for you and your family, in the future. And as we always say here on the Henwood Edge, there's no such thing as a one-size-fits-all mortgage. Everyone's different. Everyone has unique circumstances and situations. And so we have to treat each client individually and make sure that what they want to do makes sense for them, all right? And here is my phone number. You can call or text me at this number. If you have questions, you want to talk about your situation, you want to see if it makes sense to you, for you and your family to refinance, please call me. I'll go through all the numbers, we'll speak through all of your options, and we'll see if it makes sense for you. Okay, that's all for today. Stay tuned because we're gonna have more episodes coming out. I'm gonna have some guests talking about different aspects of the homeownership or the closing and the mortgage process in the future, and we're going to cover some more topics, some exciting topics. So it's great to be back, but we'll see you next time here on the Henwood Edge. This is not a commitment to lend. All loans are subject to credit review and approval. Not all loan programs are available in all states. Contact a North Point Bank loan officer for further details.